We are not stock market commentators, neither are we opinionists. Now, we are analysts. We follow the market and the happenings in real time. Now, like a typical Nigerian will say, we bring you the news as it is hot. Welcome to Clockwise. Today we'll be having a very sweet conversation, and the conversation will be broken into three places. First, we are going to review the news, if it is possible actually to invest in the Dangote refinery IPO through your POS operator. And also, we'll be reviewing other ETFs we actually called on one of this particular episode of our Clockwise. Now, we'll now move thirdly to analyzing two other stocks that pays dividends, ETFs actually, that pays dividends. Now, it will be a packed full event, and you're going to move from one stage to another stage. And like I do it here often, I bring my guests, and like I tell you, he sleeps on the charts. He's always with the fundamentals of these businesses, and we follow the happenings real time. Now, with a resounding virtual round of applause, welcome Mr. Kanem. Welcome to Clockwise.
Thank you very much. Thank you.
All right. Now, before we actually dive into today's conversation, where we'll be actually analyzing two ETFs that pays dividend consistently. They have been paying dividends consistently, and they will pay consistently. Let's first of all look at the news. Now, we're told over the week that it will be possible rather, for you to invest in the Dangote refinery IPO through your POS operator. And also, we saw the Pencom giving leverage to other big hedge funds to invest in the IPO. How does this affect the incoming IPO?
Okay, thank you very much, first of all, for having me. So here is the deal. So, of course, everybody now knows, I think almost everybody knows that Dangote is listing. Dangote would be selling to the public, shares to the public, to raise an estimated $5 billion. That money is, like I said in the last podcast, that is almost 6 point something trillion naira. And so you need liquidity, serious liquidity, to be able to capture that value. Yes, it's going to be dual listed, but even in Nigeria, we also want to be, at the end of the day, it's a Nigerian company. And so I had also mentioned in that podcast that unfortunately, the Nigerian capital market to our market cap to GDP ratio, we are sitting at 160 trillion naira, which is roughly about $117 billion. But that's just 35% of our GDP, and that is very poor. Okay, that's a very shallow market depth, if you ask me. I mean, compared to other countries. So, I mean, when you are having such a momentous event like the Dangote IPO, it's going to be like 43% of the stock market of the Nigerian exchange group. Market, so, what that means is that you need so much liquidity. There are two ways that liquidity can come from the IPO. Number one, it could come from people selling off their position, in which case you are literally recycling cash, selling off their position in some other stocks and rotating it into Dangote stock. That's one. Secondly, it could come from fresh capital coming into the market. Okay. So what is the best strategy to ensure that fresh capital comes into the market? It is to open it up. So the first thing that like you rightly noted, is that Pencom has approved for pension fund managers to look at investing in the IPO. Now, for people that may be new to this channel, people that don't know already, your pension, what you contribute monthly as pension, is actually used to invest in money market instruments, and that pays returns over time, and that's what they actually use to pay you your pension. So there has been some restrictions. There are some restrictions on the kind of asset, on the kind of instruments that pension fund managers can actually invest in. So essentially, it's been majorly bonds, because it's the safest asset. You don't want to invest pension is people's life hope, really. You don't want to invest in something that will be highly volatile. Good. So traditionally, it's been invested in instruments like bonds and all of those. So, but the Pencom has allowed, has opened the window for it's an exclusive window. It's not, the rules are still the same though, but they have actually they're allowing pension fund managers to begin to invest in the Dangote refinery.
Does that say anything about the Dangote refinery?
That actually shows that the Dangote refinery is like a sure bet. No investment is sure bet, but compared to other names, they are sure bet because number one is going to be dual listed, and then the liquidity will be there. Like I told you, there's something we call Hotel California situation in investment, where you invest, it's easy to invest
and buy shares, but difficult to sell.
But difficult to sell. And if you don't sell, you can't realize any profit. You can make 100 or 200%
once you can't sell.
But once you can't sell, you are trapped.
All right, now before we move further, let's talk about the POS stuff.
So for the POS, it's still a way of allowing more Nigerians to have access to that investment.
So you may not need a broker.
So yeah, you may not necessarily need, normally you should do the traditional brokerage and all of that, but again, you still need a brokerage account. So what that will mean is that because you need your CACS, there's Central Securities Clearing System, a number. That's your identity. If you don't have that, you cannot participate in the stock market. But that will be very, very decentralized, would be so easy so that you can actually do it through POS. And this is another strategy to ensure that liquidity comes in. The average Nigerian does not know what you're talking about stocks, actually. The average Nigerian still has money to keep. If you look at, I told you, if you look at the participation of retail retail investors in the Nigerian stock market, it moved from 500,000 to 1.6 million in a very short time. And we're projecting that before the end of this year, we should be looking at 5 million. So a way of allowing Nigerians to be part of that, the IPO, to be part of this infrastructure play, which I call it an infrastructure play, a continental infrastructure play, is by allowing, you can imagine the millions upon millions of Nigerians that use POS terminals. So they should be able to have access to the IPO through POS terminals.
That has been actually laid very clearly. Now, let's talk about there was a time we discussed some ETFs on this show, and I think that topic was this safer than stocks, something like that. Yes. Now let's review, because I like us reviewing whatever we call here, so people will know that we are following these things on real time.
I want to say that we are not just short-term traders, but we try to get some kind of guide. Okay, it doesn't take forever for you to know an investment that is worth looking at. So we looked at three on the I think April 20th. We published a video. That video was published April 20th, and we want to review what the performance has been for those calls. The first one we mentioned was CML, the Stanbic IBTC Assets Management Limited Pension ETF 40. So this is an ETF that tracks the top 40 companies that are pension compliant, or PENCOM compliant. And so at the time that we did that, it was already a very serious bullish momentum candle. So we had said, if you watch that video, we had said that a good entry would not be at that point. We said a good entry was, we actually traced the imbalance because it was trading around 12,000. But we said that we see a lot of imbalance. I think the imbalances we talked about were as low as 4,595. And one of the things I mentioned on that video was that you should dollar cost average. You don't want to time the bottom. Nobody has ever been successful timing the bottom. So the entry was triggered at 4,854 naira, and then 454 points for the ETF, and then from that point, we are already up 58.63%.
Okay.
From that entry point. But let's say if you did not catch, let's say you did not catch that, you should be sitting at least 40% up on your portfolio if you had done the dollar cost averaging that we recommended. Okay. That's why we always mention, you don't lump everything at the same time. You always do dollar cost averaging. You're sitting around 7,700 at this point. You don't dump everything at the same time. You dollar cost averaging. So if you are dollar cost averaging and then ended up at, let's say, 5,000 or 5,200, you should be up over 40% on the investment.
Okay.
That is for CML Pension 40. Then we also had another one we called, which was Stanbic IBTC ETF 30. So that one was, it's a large cap ETF. It tracks the top 30 large cap ETF. And it still boils down. The reason why we said that was, remember, someone actually asked me in one of the videos I did, he said, you guys keep on talking about some of these large caps. What about the small, tiny ones? I said, listen, it is important that you understand that the depth of market in Nigeria is still very shallow. I can't say it enough. It's still very shallow. The market cap to GDP ratio in Nigeria of the Nigerian stock market is just 35%. The reality is that I want you to understand how investors think. Investors don't just invest in it, especially institutional investors. My experience in the financial market is follow the whales. Don't swim against the whales. That's just it. So we look at what are those names that investors would most likely want to look at. Because investors look at liquidity. Liquidity for them is how easy can I exit my position without affecting the price.
Okay.
So that's why you see us look at some of this large cap, and that's why we also mentioned the Stanbic IBTC large cap ETF, which at the time it was trading at 3,550. And I remember mentioning that was still a good time to, because the momentum had. One of the things, by the way, monitor imbalances. Imbalances, we said, are imperfection. And the market almost always likes to come back to fill those imbalances. Because that's like an institutional drawdown. I don't want to go very technical, but these are technical stuffs. That's like an institutional drawdown. So the market always likes to come in and fill those imperfections. So that's why it had filled that imperfection at the time, and that was still around 3,550. It's moved up to 4,450. That's a 25.35% increase on your money. And that is just, by the way, April 20th to today is 18th. That's just less than a month. And you would have done 25% on your money.
Okay.
Good. So that was for that. And that has been because of the significant outperformance of large cap stocks. We have seen names like banking stocks, like tier 1 banks. We've seen in industrials like Boa Cement, Dangote Cement. We've seen names that have made insane amount of returns. Dangote Sugar. Most of those industrials, most of those banking stocks, they have done so much, and those are the largest stocks that those are the stocks that this particular ETF tracks, and you would have gotten 25.35% for that particular one. Then the last one we also mentioned was Vetiver Griffin 30 ETF. That also tracks large caps too, particularly liquid stocks. Liquid stocks. Like I said, you don't want to be caught up in a Hotel California situation. Because if that happens, then
you can only buy.
You cannot sell. It's actually that expression, Hotel California, is taken from the. I don't know whether you know about the Eagles. There was this song, Hotel California, but there was a line in that song that says, "You can check out anytime, but you cannot never leave." So that's why you want to avoid that, please. We don't recommend, we are not saying that you should, we say do your research. But before we come up with names on this channel, one of the things we look out for is how easy is it for you to exit?
Yes. Not just
it's not just to rush into it.
Normally, recently I saw when somebody said, is it 3 ETFs that pay monthly? I was like, in Nigeria?
No, the ETFs don't pay monthly.
ETFs don't pay monthly in Nigeria.
They don't pay monthly.
So I was like, okay, no problem. We're about to discover something.
So please don't get yourself to invest in something that someone just. We've had situations where people will come on TikTok and then we tell you invest in this and people rush in. I don't want to mention the name of that company, but a friend of mine actually had that situation. But I don't want to mention the name of the company. She got stocked. She has been for the past 3 weeks. She's been trying to sell it, but she's not been able to, because
buying stocks.
Once you should understand that when you are selling, you are actually selling to another. If you are selling to another person that is buying. If nobody is willing to buy the stock, then how are you going to sell and then cash out on what you think are your paper gains? So it's important that you do your research and be sure about the liquidity of the stock or ETF that you want to get into. That Vetiver Griffin 30 ETF. By the time we called it, it was at 87. At 87 points. Now it is about 97 points. So it has returned 11.5%. I mean, that's in a month.
It's not
not up to a month, but that could have been something you'll be looking at. But like we had said, you don't want to invest in. The reason why we don't mention just one ETF is that we always want you to diversify across board. Yes, you might want to go in, maybe pick 2 of the ETFs. I would tell you at the end of this show, I will tell you how I would invest if I were to actually allocate funds to these ETFs.
All right, now we've actually looked at those ETFs, the 3 of them. We're 3 now? Yes, 3 of them. And to tell you that we're actually keeping track of everything we do here. So every call we make, we keep track of them to ensure that we are following the right path. Now let's move on to today's conversation. Now we are going to analyze 2 other ETFs that have been paying dividends consistently. Now, with the same analysis, we'll be listing out these 2 new ETFs.
I won't say new. The ETF market in Nigeria is not very matured. I'm going to say that very clearly. I mean, you can do your research.
Yeah.
The ETF market in Nigeria is not matured. So everybody wants to see the next shiny thing, but it's better that you sit in the one. They say better the devil that you know than the one you don't know. So we are going to still be telling you the reasons why you should invest in the ones that we have actually mentioned.
Okay.
And I'm going to say the first reason is that we look at the chart and we see there's a lot of accumulation. If you look at most of these ETF have been repriced because of 3 things. Number 1, FX stability.
Okay.
Has made it possible for investors to begin to consider Nigerian investments. Number 2, inflation has been tamed down from 39% to the last CPI numbers we got was around 16.9%. That is compared to what we had before. It's still, and then we have been. The Nigerian stock market has been re-rated from B- to B+. So that is something that has actually brought a lot of institutional investors. And the reality is that retail traders actually don't move from the market. Institutional traders move the market, really. So you want to go where the institutional players are going to play. And for that, I would still say that if you ask me, I would still say that you should consider some of the names that we have already mentioned. I look at the charts and I see that there's been a very powerful accumulation, and some of these names, for example, especially the Stanbic IBTC ETF 30. If you look at the chart, you see it is still a very good play. Vetiva is still a very good play for me, and the reason is because by September of this year, Nigeria will be back on the FTSE Russell index. What that means, we expect an estimated $1 billion inflow to come, $1 billion in inflow to come into the Nigerian market.
Okay.
Guess where the first those numbers will be coming into? They'll be coming into large caps. I can't say it enough. These will be coming into large caps. So you want to follow where the ETF that tracks large caps before they trickle down to the small. Yeah, I know someone will tell me that those large caps, for you to double your money will be difficult. But let me tell you something. I want to use tier 1 banks as an example. I like to give examples so you understand the analysis and where I'm coming from. I remember last year, GTCO was selling at 44 naira, and I was telling someone, let's buy. They said, no, I'm not going to buy GTCO. I want to buy penny stocks. Let me go for penny stocks. What about the ones that are 1 naira,
I
2
saw that
naira?
even recently. So.
Yeah, 1 naira, 2 naira. And I said buy. But what has happened? That same stock has done a 3x in less than a year.
Since then, yeah.
So because the math is simple, I will not go and put as an institutional player. And by the way, I work with an institution that invests also in securities. As an institutional player, I will not go and invest money in an asset that is not liquid. In an asset that if I want to place a sell order,
like now,
if the price is 150 naira and I place a sell order, by the time my trades execute, the price is now 50 naira. that means that market is not liquid enough. As when we talk about institutional grade liquidity, it means that an institution should be able to exit a position without influencing the price of the asset.
Okay.
So that is why large caps will continue to remain for the biggest outperformance. It's not because people don't look at it, it's because of the illiquid, the relatively illiquid nature of the Nigerian stock market. 35% is still very shallow. So I know that a time will come where the market will grow so much that we will be able to begin to have such a robust market that even when some of those small names will be playing very well. But for now, we are looking at Vetiva. The ticker symbol is VetGrief 30. I'm looking at the chart and it looks very promising. So
okay, we actually do dollar cost
averaging. Yeah, of course, dollar cost averaging is actually what we recommend here. Yeah. Then we'll do Stanbic IBTC.
Okay.
Then but if
so Vetiva and Stanbic IBTC
ETF 30. Then as an honorable mention, VetBank. That is for banking stocks.
Okay.
Remember, we've been talking. Yeah, VetBank is an honorable mention. So said Vetiva, Stanbic IBTC ETF 30, and then VetBank. VetBank, like I told you, is because it tracks especially the tier 1 banks, and the tier 1 banks have been doing phenomenally. If you look at if you look at the performance of the stock group, we have oil and gas has done 118%. The same thing with the banks. Okay, banks have done 57%. That's because of the fact that some banks have outperformed, like Access Bank has not done very well because of the payment losses. But if you look at some of the top performers that have done incredibly well, industrials have done very well. That is why I'm mentioning Vetiva 30 because it tracks industrial. Industrials have done over 120% return so far. So I'm talking about the average. So you want to look out for those names, ETFs that track those names. Those are the ETFs that are most likely going to perform very well to the end of the market.
Okay, all right. Now, before we actually...
And then I'm going to tell you how I would allocate...
Yes. I wanted to ask that. Yeah. Now, how will you allocate your resources to this? Okay, 2. The other one is an honorable mention.
Yes. Yeah. So for Vetiva, I would do 40%. If I had 1 million, 1,000, let me use 1,000. It's easier to. If I had 1,000 naira, 400 naira will go to Vetiva.
Okay.
Because, like I told you, large caps. Then I would do 35% to Stanbic IBTC 30.
That's 350 naira.
That's 350 naira. Then I would do, if you put that together, that's 750. So we have 250 left. I would do 100 naira to VetBank. Yes, then I will keep the rest as dry powder. Remember, we have always said on this, I can't say it enough.
Dry powder.
Always keep your dry powder. There will always be market dislocation. And without dry powder, your hands are tied.
So somebody said liquidity is the greatest asset you can have.
Liquidity, yes. Or let's call it cash. So, some people don't know that cash is actually a position. Cash is a position.
Oh, it's a take position. You're talking about also have cash.
So cash is a position. People don't. I know people that once they see money, cash, it's like I should invest it as a. No. I mean, sit on cash.
It's a position.
It's a position, and you soon understand. Some of the wealthiest people. Have you asked yourself why some of the companies that you are talking about? Do you know why Alphabet has become such an outperformer among the Mark 7? Because they had so much money to invest in AI.
You must always have money.
If they did not have free cash flow, they will not be able to invest and be competitive in AI. So you want to always have liquid cash. It's very important. You can only take advantage of a market dislocation when you have cash.
When you have cash. That's a very strong one. You can only take advantage of a market dislocation when you have cash. All right, that's that for us. And we're talking about Vetiva.
We're talking about Stanbic IBTC ETF 30
and VetBank.
And then we talk about.
So those are the ETF we'll be monitoring for now.
Till year end.
We're monitoring them now for now. So we'll monitor them, we'll follow them, see whatever they are doing. But before you actually do your investment, you have to do your research, your personal research, or you speak to your market analyst, your personal stock market
Drop out the
analyst.
comment
Or you
section.
drop the comment section. Now we are going to respond to you. By next week, we should have a particular group. Maybe it was a channel, a Telegram channel, or a WhatsApp channel where that's where we can actually trade live.
Yeah. Yes.
Trade real time. So if you want to join, you can actually also join on that channel and trade with us real time, and we monitor it real time. Like I say, my analyst sleeps on the charts. He actually follows the fundamental. Now, on that note, we'll come to the end of today's episode of Clockwise. Welcome. Thank you very much. Thank you very much. And please do not forget to like, subscribe, and also put on the notification bell on this channel because of the amazing content we bring. And also do not forget that the illiterate of the 21st century are not those who do not go to school or those who will not go to school, but are those who have refused to evolve as their environment is evolving. My name is Providence. I'll see you again.